Okay. Good afternoon. My name is Michael Wydick. I am the big kahuna today, and I'm grateful for the time that we have together. Shaharb. Hey, Shaharb, how are you? I haven't said your name right once in the last several weeks. I'm so sorry. We are here today to discuss the fact that the markets you trade are not random. And with a tool that we've developed over the last nearly 12 years, close to 7,000 customers with a 4.7 out of 5 rating, we are able to intercept times in the past that are recurring with relative frequency, movements that banks are making under our radar, under our noses, never really hiding the fact, but disguising their movements in things like news events and TV reports and all sorts of disinformation that prevent you from getting a good handle on what they're about to do next. A few days ago, I sent all of you who are not customers and on our mailing list a copy of a web page that had links to the market times for Wednesday and Thursday in popular futures and forex instruments. And so I'd like to talk to you a little bit about that as we get started, just so you understand how the process works. You see, for the last 10 years, we've not altered the way we prove this process. On Tuesday night, we send an email out to thousands of traders that are not customers. And so this 3-day progression is very important in helping you understand how manipulated the market you trade is. On Tuesday night, when that email leaves our server, it has time histograms for Wednesday and Thursday. Histograms for popular markets like the E-mini S&P, the E-mini NASDAQ, the gold futures contract, the Euro US dollar, and the pound dollar, to name a few things. This software works on futures, forex, equities, Bitcoin, cryptocurrencies. If there was a way to trade underwear futures, our software would be able to intercept those signals. Then on Thursday, we come out of the markets together to ask the question, did it work or did it not work? So before we look at the signals, we need to understand what they're telling us. But I want to present a caveat before we get started, because you see, if the times worked at all, Jerry says, but trading underwear futures would be all shorts. Ba-dum-bum. That's actually really funny. The caveat that I have is, if we do decide that it's possible to know what times in the future movements are occurring most of the time, more than half of the time, maybe 60, maybe 70%, then we have a problem. You have to make a decision at the end of today's presentation. Do you want to know when the signals are coming or not? So if we scroll down, you'll see that we have one of these time maps for nearly all of the markets that I've described to you. And we always give forex a bad rap and wait till the very end. So this week I'm going to start with the pound dollar and go from there. Let me paste that in there. Tim says we could be trading long underwear. Si necesita ayudar en español, hay una noticia ahora en la caja de chat. Y tú puedes ver, hay una persona quien se llama Juan Vega y tiene su número de teléfono y su tarjeta para contactarse. If you need help in Spanish as a customer or you want information, one of our customers volunteered to speak to you. On the pound dollar, the software on Tuesday made an output. And you can have access to this output if you have the indicator for NinjaTrader 8. And you'll see a bunch of times on the top of the histogram that have blue lines associated with them. Shahab, these are the times that we're expecting selling pressure on Tuesday night for Thursday. And vice versa. All of the times that are associated with white lines are historically times that the software uncovered buying pressure, movements that are occurring over and over again to the upside at certain times. So what we're about to do is sort of check and see whether or not the program was able to uncover these times. So I'm going to move this here. I'm going to drag the pound dollar chart down. Then I'm going to kind of pull it back. And you'll see here today that we have the London times and then the times that we were expecting. So on my chart, you'll see 1535, 1535, 1505, 1505. And so on the Great British Pound US dollar, we'll pull this out. Those of you that are trading the US session today, you'll see a series of signals. And so we were waiting, for example, selling pressure at 705, buying pressure at 740, selling pressure at 830, and then so on. Everywhere you see a blue dot is a time that we were expecting a selling move. Everywhere you see a white dot is a time we were expecting a buying move. And then these signals sort of walk their way forward with the occasional stop like the one at 135, followed by the next signal at 155 into 330. So what's unusual about these charts is that we have the times waiting for us in the future that movements are likely to occur. So if I take my chart and I scrunch it up and we start to look for signals in the future, you'll see that we have an appointment with the market at these times as we move forward into the next day. So Shabarb, we have these signals waiting for us. Now, as we move up into higher time frames, you'll see that we can look at larger and larger moves. We're not restricted to lower time frames. We simply have to change the time frame of the chart to move from a 15 to a 60-minute chart all the way out to and including a daily chart. So when we load the daily chart now, we can add more data to it. In this case, we'll load 10 years of historical data on the Great British Pound US dollar. And as we pull the chart out, you'll see that we have a good relative sense of what to expect in the future, what days we're expecting movements, and what's already taken place. Again, we are the only company in the world that produces signals on the right side of the chart. Looking back at some of the more popular markets that we keep track of on the daily chart, I know that the Euro US dollar is one of the more tracked markets. And last week we spoke about the fact that there was a huge run up on June 29th, and that from June 29th, at the times we were expecting up moves, the banks have been putting in smaller and smaller legs at each of the buying times. So between here and here was 157 pips. Between here and here was 193 pips. Between here and here was 212 pips. And so we're sort of leveled out, but more importantly, you'll notice that they haven't put in a new high at any of the buying pressure times. And this tells me that the trend is most likely changed. The fact that the trend is most likely changed is represented by less and less of a push each time we arrive at one of these buying pressure times. And so I would be watching for selling pressure now, especially with this stop run right here as of today. The next buying pressure time, as you can see here, is December 13th, followed by November 13th, followed by December 1st. When we take that same technology and we apply it to different markets, one of the most popular stocks that we've been tracking is Tesla. And last week you knew that we were looking for selling pressure coming out of October 20th. October 20th was the last time the software alerted us to a potential signal. Prior to that, we had a $28 move up with trend. We had a 53-cent move at a breakout. We had a $118 move up from the June 24th signal. We had a $150 move up from the breakout. Then we had a $74 move followed by a $32 move. So one of the things here that's concerning regarding Tesla is the fact that the move on the 11th of September was larger than the move on September 29th. That move in comparison was almost twice as large. And this leads me to believe that institutions are less enthusiastic about purchasing Tesla. And this would be a good opportunity, for example, for a put or selling the market short against Tesla, or waiting for the next signal on November 6th. As we change signals over and we look at the E-mini S&P, again, we're sort of amazed at the fact that the software is able to discover signals in the past and then project that information forward into the future. Looking at the chart, we see an amalgamation of the signals in regards to what was going on back here in the past. Once we establish what the patterns are, we can project that information forward in the future using the present day as a vertical line. Again, we are the only company in the world that tells you what to possibly expect based on what? Based on patterns that recur that we can't see. And I know I spelled that wrong. So coming into the 21st, can you guys notice what the software is encouraging us to be aware of? Can everybody see that as I pull it up, John? And we've known about this now for months, this date, just like we know our signal is waiting at November 12th, December 7th, and December 31st. As we come into the 21st now, we are watching for selling pressure in the same way that we were watching for it on the 14th and then back on the 6th of August. These are times where one of two things will historically occur. We'll enter a period of consolidation like we did on August 6th and on July 27th. Or we could see a move down. The last move down, starting on the 14th of December, if we just mirrored that move, would be bringing us down to the moving average at approximately 32.50 if that move occurs. So using the software, we're able to uncover a potential size of the range based on the last set of selling pressure signals. And or a potential move down. The software again works from daily charts all the way down to the lowest of time frames. We'll clear the drawing tools off here. And you'll see on the lowest of time frames, in this case, a 1 minute chart, we see the signals are here just the way they were on a daily chart. And if we pull it out, there's no difference. Each of the signals on this chart was available to us 7 days in advance. Each of the signals here was known 1 week before we arrived at that time. The reason we're able to do that is because we're using a vertical analysis. A vertical analysis is where we look back at the times that occurred a week ago and 2 weeks ago. So on this chart, you'll see that we have a parameter called origination mode. And those of you that are using the software, we have a 7-day look back and a 14-day look back. What we're asking the computer to do is look back in time in relation to a weekday. We're telling the software Monday, Tuesday, Wednesday, Thursday, Friday. Today being a Thursday, we can ask the computer to look right here and right here and project that information forward 1 week into the future. Today being the 22nd, we've asked the computer or the software with a 7/14 look back to go 7 days back to the 15th, and then another 7 days back to the 8th. And the computer then performs an analysis of these 2 boxes of data. And as soon as the market is closed on the 15th, we have the information available for the 22nd, which means that if we use a 7/14 look back, that we already have the times for Friday, we already have the times for next Monday, next Tuesday, next Wednesday, and next Thursday. So this vertical analysis allows us to get our hands on these signals which are knowable 1 week into the future. Now, how accurate are these signals? Well, if we come back and look at a market like gold futures, we have a new customer. He's a new dad, home with his beautiful son, first baby, and he trades gold. And so one of the markets that we were tracking, Jonathan, if you're here, good to see you. Let me just quick do a scan. There he is. Hey, John. Everybody say congratulations to John and his beautiful baby boy, Brendan. Super great guy. I'm looking forward to working with him. We had signals in relation to gold that we were waiting for. Now, if we come back and we take the signals for gold, you'll see that we had the same kind of histogram. The software had gone back a week ago and a week before that, and it was telling us to look for specific times, 3:25, 5:15, and so on, 2:25, 3:50, and so on. And this information was available to us on Tuesday, and the chart was a forecast for Thursday. So everywhere we see one of these buying pressure times was a time we were expecting buying pressure, and vice versa, blue for selling pressure. We've had that information now for 2 days. When we come back and look at the chart, there's some really funky stuff going on here. We are downtown, Chinatown, funky town, crazy, crazy stuff going on here. So Euro market to the US market. I'm going to show you now the kinds of signals I've been teaching John to trade. When we use the system as a standalone entry-exit system, things get pretty easy when we trade it in a trend configuration. On this chart, you'll notice that we have a 120 period EMA. The 120 period EMA is adjustable. You can turn it into whatever moving average you want, or you can take it off completely and trade however you want with the times. Our two signals involve a signal with trend as well as a puncture trade. Let's go over the signals with trend really quickly. Everywhere the blue dots line up with the blue moving average, we're going to look for a potential short. Our stop is going to be one tick above the dotted blue line. That dotted blue line is a variable of the average true range. And so the gap in between the candle and the dot right now is set to 1.5 values of the ATR, the average true range. So as the market is speeding up and slowing down, our stops are increasing and decreasing. You can also trade with a fixed variable stop. And now as we work our way from left to right, we see that we enter at the close of the candle and exit by the next signal. We have windows of time that are open to us to look for profits. We enter with a $3.50 move down at 7 a.m. We enter at 8:55 and exit by 9:15. We enter at 9:55 and exit by 10:35. We enter at 11:30 and then we exit right where we started at 12:50 if you trade through lunchtime. Our first stop out comes at 1:40. We do hit that blue line and we lose $2.50. And now after and just before the close, you'll see moving into the Asian session, we're up $7, which is the time John's going to trade when the baby's finally asleep. Those are all signals with trend. They line up with the moving average. And so everywhere you see a blue dot and your moving average is going down, those are the times that we're watching for shorts. And again, this will work on any market in any time frame. Then we have the unusual puncture trade. A puncture trade is the failure of a counter trend signal in the direction of the trend. So in this case at 8 o'clock, we're expecting the market to start to perform with a bullish move. This is what we were expecting at 8 o'clock. The trend is down though, so we're hoping to be involved in it if it keeps going down. And what I explained to John earlier and what I'm hoping you'll understand is this. A puncture trade involves breaking out of the stop of a counter trend trade. When we blow through the stop of a counter trend safe trade, it is potentially safe for what? Shorts, because the buyers didn't show up. So we place a selling order right on the white line. If you're superstitious like me, you can put it one tick below, and then we hold that trade until the next window for a $6 move. So a puncture trade is simply waiting for the market to break through a time that was supposed to go the opposite direction. We're essentially betting that if they don't show up, the trend will continue with gusto. It'll move like an impulse leg straight through it. And so as we keep track of those trades, we have a $3 move, $30 tick, 60 tick, that's 90, 100, 170 ticks minus 20. So that's approximately 150 ticks in one day, which is equal to about $1,500 per contract. Are there any questions about the signals with trend when we're looking at the market, right? And as we go back, the same thing works in reverse like we had yesterday. So in gold at 750, for example, we had a signal that was below the trend line. The prior signal at 725 closed below the trend line and fell into our signal. So from here to here was our short. And then at 750, we're below, and then right here, John, it crosses above the moving average. That is our condition for a long entry. Our stop goes right below the crossover candle. And now we hold it until the opposite signal. That occurs with 80 ticks or nearly $800 per move. The next signal with trend occurs at 940. And yesterday at 940, if you went in and got out by the next signal, it was a $2.50 move. Then we had a puncture trade with a stop out right here. We lost $2.50, followed Jonathan by another stop out right after for 4.7. And then we kind of went into lunchtime after that. So 20, 100, 120, 150. So yesterday morning, it worked out to approximately $500 per contract by lunchtime hypothetical movements. And as we kind of scroll back on gold over the last several days and weeks, you'll notice that we have a lot of those big predictable moves. And Jonathan, a lot of those are occurring in the overnight session. So from here to here, from here to here, from here to here, these are all when the baby is sleeping. Yes. Go to sleep, go to sleep. Close your big bloodshot eyes, la la la. So this gives you some sense of what gold is doing. And again, if that's too low of a time frame, if you want to break it out and look at higher time frames, you can to get a higher time frame analysis. We can go all the way out to and include a daily time frame on gold to get a sense of what we're expecting and have that under our wings. Looking at some of the other wackier markets, the NASDAQ was fun today, wasn't it? That was an absolutely hysterical market this morning. And as we pull those times down, a lot of times with a trend that's out of control, one of the things that happens is paralysis. How many of you experience in a runaway trend this paralysis where you're never sure if you can get in, if it's safe or not? As soon as I get in, it's going to do what? Anybody? As soon as I get in, it's going to reverse. So having the system on the chart is wonderful because number one, of course, it's telling us where those punctures are occurring. And in this case, that one puncture in the NASDAQ took us up $37 or nearly $700 per move. The next signal when it crossed over took us $25 or $500 per move. At 9:58, that's when the trend reversed. We enter short from 9:58's close to 10:04's close. That was a $26 move. We now wait. There's no puncture of the line. We get here at 10:13, and oh my gosh, there's only 3 minutes and we lose $2. Womp womp. The next signal comes after no puncture at 10:19. And when we trade with the trend, we only need a handful of large winners to eliminate all of the small losers and put us in positive territory. We enter at 10:19, we exit at the opposite time, 10:26, for a $47.50 move. Now we have our first puncture. It comes through the line. Our stop is above the puncture candle and no hiding from it, no shame whatsoever. Our protective stop loss does its job and we give $6 back to the market with gratefulness. 10:41, we enter at the close. There's no way it's going to go down anymore. It does go down. and then it settles a little bit higher. We catch it at the top of the pullback for $12.50. Now we have this wonderful double bottom. Some of you are counter trend traders looking for divergence. Here is an example probably of where divergence occurred on your oscillator. It goes up into 1059, and now we start to see the trend reversing. This is the first place we have a net loss, $10. The next signal here is also a net loss going into lunchtime. And so from left to right, we have 35, 60, 85, 130, 125, 135, let's say. Now 125, 115, 110, 108. Let's call it 100 ticks or $100 of moves in the NQ times 4 equals 400 ticks times 20 equals what? What's 400 times 20? It's $8,000 if I'm not mistaken. And I may have gotten the math wrong there, but it was a net profitable day using the signals from the software. And then Jonathan, I want you to see the moves from the night before when the baby is sleeping. These are the 9 o'clock moves Eastern. And you can see even in the Globex session, John, there's very little random movement occurring. In fact, it's probably a lot easier, especially with a single contract, to get in here and follow those movements while you're watching Netflix with the wife. Honey, are you awake? This is the best part. I guess I'll clean the baby's diaper. You rest up. I prefer the NQ, but as you can tell, I talk a lot faster than most people, so I have a higher penchant for pain. Then we have other markets like the DAX, the European Futures Index, and these were the times for the DAX from yesterday. We reload the Ninja script, we'll see the signals down below. And even the European markets are really predictable. These are the times that I gave you in the DAX for the Wednesday market. And so if we scroll back up to here, you can compare what was expected in that market to what actually took place. So if you see here where it says 712, 636, 712, 636, 542, 524, 542, 524, 448, 448, 351, 351, and 306. So all of the signals on this chart that you see here were movements that we had been waiting for 12 hours. I had given you the times for these movements the night before, and then we can see what happened in today's market is pretty much identical to what happened in the Euro market the night before. It doesn't take long for us to see that the banks had a plan. They always have a plan. The reason you suck at trading sometimes is because you didn't know their plan. Sorry for the suck word, but it's the only word I know that accurately describes what is happening in this rigged game. All of these times were known 1 week in advance. Again, if we go to the right of the screen and we pull the chart over, these are the times for tomorrow right now. We are the only company in the world. Shaharb, for you it does. because you've come so often. That is my answer in your chat box. Any questions so far about this? Any questions so far about this? When we come and look at a very popular market, the E-mini S&P today on the 5-minute chart, what I want to do with you very quickly is just look and see what times we were expecting things to happen and what times things actually occurred. Exactly, Eric. So the move at 10:05, we were expecting selling pressure, and we got it. The open at 9:35, from the very second the market opened, it pushed up into 9:35. At 8:15, before the unemployment report was released, you can see that the market pulls down. At 7:35 in the US pre-market, you can see the leg up. Then this wonderful, wonderful, wonderful double, triple bottom right here at 10:45. At 10:45, we knew what to look for. We knew when this run down was most likely going to end and finish, right? And again, if you look at the software, if we come in here, we're still looking at the signals on a 7 and a 14 look back, which means the software is going back 7 days and 14 days over the last 2 weeks of signals. Okay. The next signal didn't work out so well. Let's just be honest about it. The candle closed at 34.19 and it finished at 34.25. That was a $5.50 move. The next signal from 11:35 to 12:20 was a $2 move up. There was a puncture, but it was a small one, followed by a long at 125 into 210. Then we had a signal right now after the webinar started and into the overnight, it's up $1.50. Okay. If we entered at the close below the moving average at 10:05, we had a $13 move over here. If you went kind of bonsai at the open and decided to get in right away, that was a 3 3/4 move. If you waited for the close, that signal was down $3 instead of up. So when we pull the day together and we add the different signals up on the largest market I can analyze, -3, +13, -5.5, +2.5, +6.75, +1.5. We'll do a quick calculation and we'll see that using times that were available to us 1 week in advance, net a $12 potential move times $50 per contract equates to a $600 day using a moving average and times that we had available to us 1 week in advance. My two favorite contracts are the NASDAQ and crude futures. The NASDAQ and crude futures, they move purposefully. So Mark, can you see how well the signals behave themselves on crude today? It's nice to watch it, and I will often find myself playing down in the lowest time frame on the 1 minute chart. And a lot of people don't like the lower time frame, but I do. And then vice versa, I really enjoy the NASDAQ because I don't have to wait for the move. Now, some people, it's not their cup of tea, but because I know It's $50 per dollar, John. So we had $600 at the end of that. I was measuring dollars, not ticks. No, you're welcome. So I prefer to watch the NQ mark because the moves are smaller and it either works right away or it doesn't. It either works right away or it doesn't. Any questions? And so I can lock it in pretty closely. And when the NQ is humming, I can find a signal and just lock into that move. So the 1 minute NQ for me, all it takes is one good move with trend and you've pretty much locked up your day. From here to here, take the breakout. From here to here, take the breakout here, get stopped out, enter here, you only get $1.50. So I love just scalping these little moves that I know about in advance and trading them. I can keep up with the NQ or any market because of one thing. And there's one thing that gives you a fatal advantage that banks are scared to death about. I know the exact time I'm going to enter, and I know the exact time I'm going to exit. That's it. What other system provides that benefit? Nobody. It's impossible. So there's no mystery. There's no stress. There's no anxiety. There's no reaction. It's all proactive. And then it's just risk management. I know where my stops are and I know how long the trade has to go. Now, if you want this, I told you today was going to be a very short webinar. If you want this software, can you explain the loss you just identified? Okay, yeah, so in this case, we were waiting for a puncture of the blue line. Michalo, can you see right here where it finally came through that line on that candle? So my entry would have been long right here. You can use this software on NinjaTrader Demo. That's what I'm using right now. And then, Michalo, my stop would go one tick below that candle right here. I'm waiting for it to go this way and go and go and go and go and go. And it didn't. It came down, and then right here it hit my stop. So when I trade a puncture, my stop is always one tick under the candle that punctured the line. On our chart here, we'll see in our product store, coming full circle, we're almost done. TachEON WARP is the product that we're looking at. If you would like this for yourself, correct. The program that we're looking for is the second one in from the right. It's our flagship product in use by 95% of all of our customers today. I'm going to put a link to the product in the bottom of your box. And if you look in your chat box, you'll see a copy of that link right there. At the very bottom of that page is an orange Buy Now button. Brendan, we have close to 7,000 customers in every major financial country in the world. People as far south as South Africa, customers in Alaska, all over the US primarily, Europe, Asia, Thailand, Saudi Arabia, Dubai. We're starting to have more and more customers in China. Hey, Alpha. Hey, Shabarb. Shaharb, you can, but you have to give me a phone number that someone can get in touch with. If you click on the Buy Now button and you go to checkout, you'll see that there's a place for a purchase agreement. Hey, Patrick, if you send me an email at the end of this, I'll be happy to send you a recording. There's a place to put a promo code. The promo code for today is WARPOFF. And if you apply the promo code, it takes $500 off of the list price on the website. So first thing you need to remember, promo code WARPOFF, all in lowercase. Now, Patrick, email me because I'll forget. I have to actually run to the doctor here in 5 minutes. So if you can email me, I'll give you my address shortly. In this, you're going to get 2 computer licenses for NinjaTrader 8. You're going to get lifetime updates. You're going to get 2 one-hour training and setup sessions with me. You're going to get 1 installation session for free. You get lifetime video training in our video training archive. You can change computers in the future for free. And our undying gratitude. This does work with futures, forex, equities, and crypto, as long as you have a data feed for them. Luke, check your box. And that's what you get because you're a customer. And then I sent you another note. If you need to reach me, I will be available tonight, especially if you have a phone call or a question in about an hour. My name is Michael at backtothefuturetrading.com. My Skype is Integra-Michael. And my phone is 336-703-7667. I'll go ahead and I'll copy and paste that into the chat box. And we are done. Ladies and gentlemen, you can know Kevin right here. There's your code right there. You can know the times. Rick, you want to reach out to Ron? And he will square you up. I just put his email address in there. He'll work with you one-on-one for sure. You can know the times tomorrow for the E-mini S&P, for the DAX, for gold, for silver, for bonds, notes, for Apple, for Tesla, for SPY or QQQ. You can know what Bitcoin is probably likely to do tomorrow, a week from now, a month from now. If you choose to go forward without these times and use a program that is not working for you, use a system that you're losing money with, then I wonder if you're really trading so much as maybe gambling. Scott. That is your answer in your chat box. That is prepared specially for people like you. Thank you for your time here today. I do have to keep it brief this afternoon. Like I said, with COVID, it's hard to get to see certain people, and when they tell you to show up, you show up. So I'm going to have to end it here today. When we get the system, are we dependent on you going forward, on you guys? It is standalone. It works on your computer, your data, your server. You don't need us at all. I could fall off a cliff, and Michalo, it continues to work. Yay, Brendan! Thank you. Welcome on board. Jonathan, welcome on board. Again, congratulations. I'm looking forward to working with you. Mahalo, I would love to work with you. And those of you guys that are signing up as Flux users, that training is included as well. So Scott, when you sign up as a Flux user, you're going to get those 2 hours of training and the install and all that stuff as well. So please make sure you reach out to us once you sign up. And Rick, same thing. You're going to get that. You're welcome, Tim. Thank you for showing up. Looking forward to working with you guys. I got to run. May the wind blow hard at your back. May the sun shine gloriously on your face. May the valleys rise up to meet you and the mountains lay low before you on your journey. Thank you to our customers for our 4.7 out of 5 rating. We love you. We appreciate you. We can't do anything without you and your support. Thank you for helping us spread the gospel of time to the world and help traders like you become successful for the first time. Keep your eyes peeled for the recording. I'll be sending it out tonight or tomorrow morning, and then I'll be following up with all of you that are signing up. You honor me with your orders tonight, and I'm grateful. Thank you and have a great night.